What would a Donald Trump presidency mean for your investments? Much of 2024 was focused on one of the most contentious U.S. elections in history. At the end of it all, Donald Trump will be sworn into office on January 20th, 2025. He has already publicly spoken about policies on immigration and trade, with a dire warning about slapping tariffs on all imports, including those from Canada. Now, with nearly 75% of Canada's total exports are destined for the United States, what impact will this have on the Canadian economy and to your investments in particular? Welcome back to our channel, Surviving Retirement. I'm Peter Guidote, Chartered Accountant, Certified Financial Planner, and Portfolio Manager. So let's get started with the strategic long-term view. So here's a graph from our friends at Carson Investment Research. This graph plots the growth of the Dow Jones Industrial Average since 1901. So what we have here is the performance of the Dow Jones since 1901 till 2021. And you'll notice two distinct colors. The blue representing the market under a Democratic government and the red under a Republican-led government. And you'll notice that during these periods in time, the market still rose, regardless of whether it was the Democrats or the Republicans. During each of these administrations, you'll see that the markets had both ups and downs along the way. We're looking at the second graph over here. What we have are the different led administrations from 1928 until 2020. What's interesting about this graph is showing what the S&P index returns were 1 month, 3 months, and 6 months to a year after the presidents were elected. What's most interesting about it is you'll notice that the average return 3 months after was 2.5%, 6 months after 5.1%, and a year after was 7%, regardless if it was a Democratic or Republican-led government. In the last 10 elections, the more recent ones, the averages are actually much more interesting. The 3-month performance of the S&P 500 index was 4.1%. 6 months after, the average was 7%. And a year after, the average return was 15.2%. The important thing about all this is that we're looking at what strategically happens in the long term. There is no doubt that there will be a lot of volatility in the short term, and that's where some tactical positioning will happen. This brings us to the second perspective, which is what can we expect from a Trump administration in 2025, and what tactical short-term adjustments should investors be thinking about? Now, to walk through this thought process, we had a chat with Martin Roberge, Managing Director and North American Portfolio Strategist at CG Capital Markets. Since we're going to dive into this subject in greater detail, we've put this as an entirely separate video in our series. In the meantime, I would encourage you to subscribe to our channel and click the like button so we can continue bringing you thought pieces such as this. Be kind to yourself and to others, and I will see you in our next video.